Good morning. It's Friday, 26 July 2024. Welcome to yet another market commentary for today, taking into views of what happened and news of yesterday. Now, the title of today's topic is Has the AI bubble burst? Now, what impact it will have on the global markets? That is very important to consider. Now, just look at what's happened in global markets in the last few days. While we in the Indian market have been enjoying all-time highs, and every time there is a fall, there is a huge amount of buying coming into. Now, take the poster boys of the AI movement. Nvidia is down 40% from its highs. Imagine if a stock is down 40% from its highs and people are still not concerned, then it's a matter of concern. Then you have Intel, which is down 40% from its highs, recent highs I'm talking of. Then you have Meta, which is Facebook, which is down 15%. Tesla, another poster boy, down by 33%. So if you take Tesla, Nvidia, and Intel, they are in deep bear market. But nobody is talking of a bear market in NASDAQ because NASDAQ is down only 9%. Google is down 10%, Microsoft is down 10%, Apple is down 10%. 10% fall is considered a significant correction. 20% is considered a beginning of a bear market. So you have the major stocks which have taken up the NASDAQ and S&P to a great extent. Now, either touching into bear market, they're into significant correction, or they are into severe bear market territory. Now, they are highly oversold, so that you can expect bounces, but something is cooking in the global markets, specifically in the AI segment on NASDAQ. And NASDAQ is generally the momentum boys would be there. And therefore, one needs to focus on that more than what we have been doing recently. Now, why could the AI bubble suddenly burst? Now, I suspect, of course, we can always find some reasons as to why things burst. As I keep mentioning, you'll never have bad news at the top. You'll have good news or no news. One of the things about any momentum-based market is liquidity. Now, liquidity was coming through what we call the carry trade from Japan. I had coined this thing about GEO. GEO stands for J stands for Japan, I stands for interest rates, I stands for Israel, Y stands for yields on that interest rates, and O stands for oil. So yields are, if you look at it, take Japan. Japan is the culprit, I suspect, because Japanese government, the yen had weakened considerably to about 162 to the dollar. They had problems in controlling it at 150, 152, 155, 157 to the dollar. Finally, it peaked out at 162 to the dollar when people thought yen will continue to weak, which meant people borrowed yen and then invested in equity of US and other global markets. Now, all of a sudden, it has fallen, and without any assistance or without any intervention by the Bank of Japan, the yen dropped around 152 levels yesterday. Now, it's recovered a little bit. Now, what is this drop? The drop is about 6%. Just imagine rupee dropping 6% from 84. 84 into 6 is about, it goes to 88, 89 within a span of 3 weeks. Imagine the kind of panic we would have seen. So we should panic where it is necessary. We should panic where the bubbles are there. And the number of bubbles in the global markets, it's just not a single bubble like, in the TMT, that is the technology bubble in 2000, where only the technology stocks were in a bubble. But you have a gold bubble, silver bubble, metals bubble. You have a dollar, which is in some sort of a bubble, or even the commodities were in a bubble. More than gold and silver, commodities were in a bubble. And you have bubbles, mini bubbles spreading. We had a real estate bubble, which has now crashed, the commercial real estate. So this is a bubbly market. Now what has happened is, while the scared money is moving out of the technology stocks, the Dow Jones has held up because like only a couple of tech stocks in the Dow Jones, whereas S&P has fallen more than Dow. NASDAQ has fallen 9% from its recent all-time highs, which is almost coming into correction territory. S&P also has fallen 9%, which is significant. But not so. I mean, it is easily explainable because the Magnificent Seven are sitting in the S&P. Was dropped only 3.5%. The fun part is the Russell 2000, which is equivalent to your small and micro cap, consisting of 2,000 shares, has actually gone up 12.5% from the recent lows. When Russell was making lows and the Nasdaq was making highs, if you take it from 3 weeks, less than 3 weeks, you're seeing Russell 2000 going up by 12.5%. So money is moving into the small caps. So here also you are seeing the small and micro caps are stronger than the large caps. So that is one thing we need to notice. Nikkei, which broke away from the 1918 and about 35 year highs, it went up to 41,000 and odd, and now it has dropped by about 12%, which means it's in deep correction territory. And the kind of Hang Seng, of course, is down 14% from its recent highs. I'm talking the calendar highs. Of course, Hang Seng is a sick man of the global stock markets. Europe is not doing too well. So globally, you have something very interesting coming. Some indices are going up like anything. Some indices are coming down. So it's not easy for somebody to trade. I think as we go, as I keep telling, the oxygen becomes rarer when you start climbing. And at the heights, it becomes so rare that if you do not have adequate oxygen, which is here liquidity, then you will die. Both, I mean, literally and philosophically, the markets will die when there is no liquidity. Right now, liquidity is being sucked out, but that is affecting only the large cap stocks on the Nasdaq and S&P. So now coming back to Indian markets, yesterday you see the because of the global market fall about 650 points on the Nasdaq day for yesterday. So everybody expected a significant drop. We did drop, but as I keep repeating, and I will not get tired of repeating, should we close on the Nifty below 24,200 for about a couple of days, then I think we should get concerned. However, we know there are a lot of small bubbles in our Indian market. People are leaving jobs and jumping into the markets. Doctors are leaving their professions. Lawyers are leaving their professions. Students are getting into it. Housewives are getting into it. But who are we to decide when it will end? The only way we can react is if it breaks certain important support levels. Right now, as we speak, Nifty has not broken, even Bank Nifty has not broken those levels. So we should, however much we do not like it, if we should not be shorting this market is what my analysis says. Please note that I am not a SEBI registered advisor, but this is what my analysis says. That because the moment you jump the gun and get into a biased position on the short side, the market goes up further, you will not know what to do. There will come a time when the market will turn and turn decisively. It will give you an indication, and at that point of time, you should exit. Take, for instance, railways. Everybody jumped into railways, and if you look at the railway stocks today, quite a few of them are below 10%. So once they break 20%, then I think that story is over. Right now, they may make another attempt, or stocks like BHEL, which is there in all sectors. I think BHL is showing strength, but actually it is a Kokla stock, which means it's weak internally, but it's showing strength. Look at defense, look at space. All of these are significantly moved away from the highs. So distribution is going on, but they have not entered a bear market yet. So I don't want to, be brave and try to short them here. Or what I would do, what if I don't have any of the defense stocks or the railway stocks or the space stocks, I would lighten my positions. Take PSU banks, for instance. PSU banks, yesterday, for instance, Bank of Baroda has broken the June 4th low, June 4th closing. Bank of Baroda is a very big bank. PSU banks have not done well. Canara Bank came up with not so good results. And the real test for the PSU banks will be the quarters going forward, where the interest rates, the differential is going to be very low. You'll have, because of Mudra Yojana, from 10 lakh to 20 lakh, you will have a lot more defaults. You will have possibly defaults in the farm sector. So these are the kind of things we should be careful. But still, the public sector banks may do one more rally to suck in the skeptics and to encourage people to jump in because they look cheap. They look cheap on the PE ratios, but internally, I think things are not that good. And see the market, how it is behaving. Yesterday, micro cap and small cap did very well. In fact, they closed in the green, whereas Nifty managed to close flat, and the bank Nifty is still struggling. Why? Because Axis Bank and ICICI Bank dropped. Axis Bank, not so good results, dropped 7% at one time, closed around close to 6%. Now it's balanced by HDFC Bank. HDFC Bank, why did it go up? One reason could be that it was oversold. And look at the results of L&T. They were very good, and they are in the sector which everyone should be. It went up only by 3%. Good results, 3%. Bad results, down 6%. ICICI Bank and Axis Bank were the two banks which people bought as for the Bank Nifty, as a support for the Bank Nifty. Today, there is a question mark. Whoever is buying Axis Bank today, I think is just buying against the fundamentals of the Axis Bank. So one has to take Karnataka Bank has done well, but it did not show up much. Karnataka Bank looks a very interesting bank because the new MD is a very good, a very strong MD. So that is as far as banks are concerned. What else? So therefore, what I am saying is this market is a very peculiar market. I've seen markets since 35 years. Even for a trained analyst like me, I'm finding it difficult to understand where we are, whether we have topped out or whether we'll make another top. I'm not really able to tell clearly. But what I'm seeing is that a broad section of the market is still bullish and the prices are helping them. The narrower sections of RDX are now starting to become bearish. PSUs are, there's a question mark, so we need to watch it closely. So FII numbers, if you look at it, they're this way, that way. Last day of settlement day, FII numbers are misleading because there are a lot of adjustments. So I would not like to put too much into, read too much into FII numbers. DIs have bought yesterday. DIs are flush with funds, especially NFOs are ending now. So more money will come into the market. So what is happening today is money is coming significantly higher than the supply. So demand is still there. So the market may yet go and make new highs. I am prepared for it. I am not taking a biased view unless it breaks below 24,200. With this, I'd like to sign off. Have a happy trading day. Thank you for joining.